Scott, safe to say that the Fed fairly telegraphed this one.
They did telegraph it really well, but they're trying to say that this decision does not reflect any change in the outlook for monetary policy or the economy. And that's kind of like saying that it walks like a duck, it quacks like a duck, but it's not a duck. The market's saying that this does look like a duck, and that's why you're seeing the reaction with the dollar strengthening and other metrics going down.
You know, I was on the floor of the Royal Bank of Scotland last week when we first heard about this possibility from the Fed, and traders there were interested for about 35 seconds. How much of an effect is it going to have on the real economy here, considering it's only a discount window and not the actual target rate?
It does. It's not the benchmark rate. It only applies to banks that borrow on an emergency basis from the Fed. That's not the same as affecting credit in the broader economy, but it is a measure of how easily or cheaply banks can get emergency funding. So they won't have access to this funding so easily. It's really going back to being on an emergency basis only, and now the Fed can turn to when it wants to raise the benchmark rate in the broader economy.
You know, Scott, I'm curious what you think or what you're hearing. I know this news just came out, but I'm reading something from Chris Rupke, and he says today they raised the discount rate, not tomorrow or the next day, but soon they will be lifting the Fed funds rate target, as well as the economy, as well as the economy starting to regain momentum, and the fears of the W-shaped recovery are increasingly falling to the wayside. So, again, should we start to see very shortly, whether it's another month or two, more unwinding by the Fed here?
Again, the Fed's reiterating that rates are going that the broader rates are going to stay low for an extended period. They said there's no change in that broader outlook. That's what they've been saying in their FOMC statements for quite a while now. And Fed officials have said that that's at least 6 months. So until they change that language, that's really not a signal of anything that's going to change.
All right, Bloomberg, Scott Lamman. Scott, thanks so much for joining us.